Hello, I'm Juliet Schooling Latter, and I'm here talking to Paul Smith, Manager of Premier Defensive Growth, which features on the Chelsea selection. Paul, the aim of the fund is to deliver positive, consistent returns in all market conditions over a rolling 12-month basis. How do you achieve this?
It's a reasonably traditional approach where we use long-only investments, so buying low-risk investments to get the exposures and themes we wish to obtain. Typically, most of our investments have a fixed life and a fixed entitlement, which enables easier risk modelling, and it makes the investments more predictable, so we're able to achieve an absolute return and be confident of achieving that absolute return over a rolling 12-month period.
How did the fund hold up in the global bond sell-off in the first half of 2015 and the subsequent Greek crisis?
The fund overall is negatively correlated to the bond markets. We've had a bearish view on bonds for a year or so now, and so the fund is positioned to be negatively correlated, so it did well in the global bond sell-off. And then separate to that, Greece created a huge amount of volatility amongst asset classes, despite it being an old news story, and therefore the fund was able to benefit from that increased volatility in terms of switching between different investment types and adding value for our shareholders.
What are your thoughts on the different types of bond at the moment, and how do you insulate your portfolio against potential interest rate rises and possible panic selling?
There is a concern around panic selling, definitely, in the bond market, and I think most of that is driven because of the lack of liquidity in the bond market. And I think as you try to lighten up positions at the moment, bond liquidity means there's a lot of back bidding. Prices are perhaps lower than is anticipated. And that does create sharper movements in the bond market. And we've seen year to date, the bond market has at times been more volatile than equity markets. So it gives a sign of the lack of liquidity in the bond market, what that can cause. As far as insulating it, the Premier Defensive Growth Fund doesn't have much in the way of fixed income exposure. Most of our fixed income exposure is very short dated, sort of money market instruments. And we are negatively correlated to the bond market overall. So we are quite well insulated against the potential further volatility we'll see in the bond market.
Thank you for joining us, Paul.
A pleasure, thank you.